Welcome back. Well, the markets have come off the high point of the day, but up only around 20 points odd. So just keep that in mind. The high of the day is closer to around the 18,050 odd, which has been rejected in Friday's trading session. The 18,000 level did get rejected. Let's see how this goes. For the time being, let's shift focus to RateGain Travel Technologies. Early this month, they acquired Adara. That's a data collection and management platform in travel and the hospitality space for around $16 million. To understand more about that, we're joined by Bhanu Chopra, the chairman and MD of the company. Hi, good morning, Bhanu. Thanks so much for joining in. Well, tell us about Adara first, since that's a recent acquisition that you've done. I'm going through an Anand Rathi report, which was released a few days ago, and they're quite positive on the company. And they say that by the end of this year, you'll end with revenues of close to around 210 crores. But they're saying going ahead, they're working with around 11% growth for the business. Do you think that this acquired asset, that's Adara, can grow in double digits? Point number one. And on the EBITDA front, I believe you're just breaking even approximately on this acquired asset. But the plans are that you can turn this around, and you've got a good record on that front. So for FY24, on this asset, what should margins look like?
Sure. So good morning, everyone. Let me start with giving you a little brief on this company, Adara. So Adara helps travel, hospitality, brands and destinations win in the digital economy by providing data and measurement tools that they need to boost engagement and drive growth. And what Adara has done is really build the largest global data consortium comprising transactional and profile data directly from 275 global brands in the travel, entertainment sectors. So the consortium includes brands such as United Airlines, Marriott, Wyndham, Kayak, Trivago, Accor Hotels, and many airlines and much more. And so to your question about the revenue profile and the 210 crores, so I think what they're alluding to is probably Q4 numbers, because as of last week, we have closed the transaction. So the Q4 numbers will be built into the Adara numbers will be built into our Q4 as well. In terms of our growth, what we've been consistently guiding is about 30% growth. So this year we should end at like 580 crores. And in terms of next year growth, we're projecting, again, 30% growth there. In terms of margin profile, like you said, yes, they are breaking even. And our goal is like within the next 12 months, we'll grow the company 15% on growth and 15% EBITDA margin.
Bhanu, hi, good morning. Prashant here. Sorry, this year, these are total company revenues, what you said?
Yeah, the 570 crores is where we will end in FY23.
FY23. And FY24?
So as I stated, we are aiming for a 30% growth, but given the run rate that we will have in Q4, which is closing to about 200 crores, if you analyze that, we should be exceeding 800 crores. Our target obviously is between 900 to 1,000 crores, but on a run rate basis, annualized will be over 800 crores.
All right, Bhanu, just to clear the part on the margins, because you all have been mentioning this 30% organic growth, and margins will improve for the company by around 250 to 300 basis points. A lot of the client spends would be taking shape now, particularly your core market, and there could be some pricing cuts. So have you observed that, first of all? And have you taken that into consideration when you're guiding that margins will improve for the company on the whole by around this 250, 300 basis points? Go ahead, Bhanu.
Yeah. So, I've been on the channel before, and what we've stated is that every year we will expand margins by 200 to 300 basis points. So when we came into the markets last year, we were trading around 10%. So I'm happy to report that we are already exceeding that. And, the last quarter, if you look at, we were at 14%. And we will continue to see this margin expansion as we report on Q3 and Q4 numbers. And I'm pretty confident that trajectory of expanding 200 to 300 basis points will continue to see. And that's sort of the advantages of being a SaaS model where the operating leverage starts to kick in. And with Adara, we have a common set of customers. And given the fact that we'll be able to cross-sell and upsell to them, I do see, margin expansion as we sort of go forward.
Okay, so that is some optimistic, targets coming through. A 30% growth, consistent 30% growth is what you're looking at. 580 crores is where you'll end the year. This year, you're looking at a 200 to 300 basis points margin expansion every year. Got that? But are you seeing any signs of contract wins slowing down? I'm asking because a lot of your peers are talking about that, deals being delayed or decision making being delayed by clients. Your Q2 deal wins were at about 21 crores. Does that number improve or decline? And I think your deal pipeline was 315 crores in Q2. What is the number today?
Yeah, so without getting into specifics, because our quarterly earnings will come out, middle of February. But I can share this with you. We had the best quarter ever in terms of, new wins ever in the history of the company. Also, looking at Adara numbers, they saw some great momentum as well. Their Q3 numbers were actually beating COVID numbers also for the first time. And if I look at all our customers as well, if you look at their revenues and, profitability, which is the large online travel agents, the big hotel companies, they are also reporting record revenues and profits. I mean, I know there is talk about inflation and recessionary pressures, etc. But, the recent customer surveys, I think what COVID has done is change people's attitudes, right? I mean, people will, probably hold back on buying that TV or a fridge or clothes, but they don't want to let up, on having experiences. So we are not, at least for the time being, seeing any let up. And if I were to look at all the data signals that I'm getting, it is proving to be continued robust demand. And with China opening up, if there are any softness in any parts of the world, I think that will make up for it.
So your track record with respect to acquisitions has been pretty rock solid, and now with Adara as well, I think you're quite optimistic. Any more acquisitions that you're looking at in this calendar year? If yes, what's the kind of war chest that you've accumulated for it? What are the areas in which you would look to acquire?
Yeah, so as I've stated previously as well, M&A is going to continue to be a core part of our growth strategy. We've been averaging acquiring one company a year, except for the COVID year, of course. But I do continue to see, we will continue to perform and look at opportunities. So, we are very, very clear on the growth path on M&A, where we want to sort of complement along the offerings that we already have. So as you know, we have three business lines: DaaS, distribution, and MarTech. Adara actually complements our DaaS and MarTech offerings, and now we have the world's most comprehensive travel intent platform that will allow to deliver better return on ad spend to our customers. So we want to do, similar kinds of deals. As you know, the tech meltdown has created great opportunity. Adara itself was a, great deal for us, and we are hoping.
Right.
I think it's a lot about patience. We have a bunch of opportunities in our pipeline, but the value needs to be right.
Got it. Banu, I mean, what you're saying is music to the ears, right? I mean, solid margins, solid growth, and then margins themselves every year will improve 200, 300 basis points. Very briefly, are there any risks at all? Not the macro kind, but, companies, your clients themselves developing these solutions on their own, or nothing at all? It's not going to happen. What's your sense? Go on.
Well, look, I'm, as a founder, I'm paid to be always be the optimist. But at the same time, I would, given the experience of COVID, I'm always state that I'm cautiously optimistic. I mean, from an sort of internal challenges or risk, look, it's all an execution risk now, right? So we've acquired this company. All the sort of forecast I'm giving you, there is a bunch of execution that we need to perform on. But I'm quite confident that we will be able to deliver on it, given the past experience, because this is not our first acquisition. This is our fourth acquisition, and we demonstrated we can turn things around. But there's definitely an element of risk, with every deal that you do.
But there's big potential as well in the verticals that you work in, and you have, as you said, you have three verticals that you've broadly divided the business in. Very quickly before we let you go, Banu, it's a fragmented industry though, right? So as a percentage of the total market, addressable market, I don't know whether you want to split it up into three verticals or you want to give us, as a consolidated entity, what is RateGain's market share as of now?
Yeah. So, the overall travel and hospitality tech spend is about $90 billion, but it can be broken down into front office, mid office, back office, and hardware. And what we sort of try to address is more sort of the front office systems, which is all dealing with acquiring customers, retaining them and wallet share expansion. So that itself is also a $7 billion marketplace. So if you think about, our share, we're closing in on like sort of 100 million. It's still very, very small. And our ability to continue to penetrate and get deeper with our existing customers, I think there's a tremendous opportunity. And so we've been very, very clear all along, and something I've always reiterated, that we will continue to focus on travel and hospitality.
That's a lot of details on your business and the way forward. Thanks a lot, Bhanu, for stopping by. Always great speaking with you and talking about your business as well. All the best. So that's RateGain, some optimistic views coming in there. But let's move on. This is our special segment, Quarter Se Quarter Tak. Abhishek is here today to take us through expectations from the NBFC sector this quarter. Abhishek, what are you expecting?
Sonia, it's expected to be a strong quarter for the NBFC in Q3 FY23. So this is on the back of the fact that disbursements will remain high and recoveries will also remain strong, despite the fact that, in a rising interest rate scenario, it could temper their net interest margin, given the fact that cost of funds would have risen faster. So NBFCs may have probably the best Q3, in last few years that you may expect in Q3 FY23 results. Strong across segments, housing or vehicles or consumer durables will support disbursements this time around. So for HFCs, that is housing finance companies, growth to be in mid to high teens, net interest margin to remain stable. CV finance growth to be in mid teens due to strong disbursements this time around. Gold finance, YOY may not be a good comparative figure. However, sequentially, that is quarter on quarter, it's expected to be a good quarter this time with sharp improvement in net interest margin also. For consumer finance, the growth to be better due to improvement that you are seeing in the macro trends, stable margins and no asset quality woes. So we have some of the estimates from Kotak Securities. For HDFC Limited, they expect NII growth of 12% YOY and 3% sequentially. They are expecting profit growth of 19% YOY and a decline of 19% sequentially. For Bajaj Finance, they are expecting NII growth of 23% YOY and about 5% sequentially, while PAT is expected to grow at 31% YOY and flat sequentially. For Chola Mandalam, they are expecting 11% growth in NII on a YOY basis and 2% sequentially. PAT growth is expected to be a 13% YOY and about 5% sequentially. For Muthoot Finance, YOY, they may see a decline in NII by 13%. However, sequentially, it's expected to be up 5% and PAT is expected to decline 12% YOY, but it can increase by 4% on a sequential basis. Back to you.
All right, Abhishek, thanks very much for that. Sameer Brise is banking analyst at JM Financial Equities Institutional Securities. Sameer, good to have you with us here. Thank you very much. Let's start with Bajaj Finance, which already provided us with that business update, right? And the stock saw a sharp reaction to that. Do you expect to hear an explanation that, well, what we've seen is a bit of a deliberate, a slowdown? We've heard that kind of commentary in the past, and the market's taken it very well. So let's just start with your thoughts on Bajaj Finance.
Yeah, so I think on the headline AUM, for Bajaj, it grew almost 27% YOY and around 5.7% on a sequential basis. I think market expectations on a sequential growth were slightly higher, given that it was a festive season. However, if you look at customer ads, they continue to do well. What we need to see is what is the split between the housing and non-housing growth for this quarter. Our sense is that housing probably would have pulled back a bit, is how I am looking at the situation. given that the non-housing book, given festive tailwinds, could have done better. Though we wait for clarity from the management. Having said that, they still continue to grow at 27-28%. They have had one of the better run ALMs in the sector, probably one of the best. Over the last multiple cycles, they have managed margins better. The company is annualizing at 5% kind of a ROA right now. So in that context, we would probably see this correction as an opportunity to add the name, which will continue to grow at 25-27% in AUMs and 25% plus in earnings. So though clarity is awaited, we would not be very worried on probably a 2 percentage point miss in AUM growth for 3Q.
Okay. What about the CV financiers or vehicle financiers? They are expected to do well too after recovery that we've seen on something like a Chola Mandalam, which in any case has been at closer to its 52-week high. What are your thoughts?
Yeah, so I think Chola is a well-run franchise, no doubts there. Given slightly rich valuations, we have a hold rating, but I think the stock having kind of gone sideways over the last 3 to 6 months, I think it makes sense. It is quoting well below our fair value. We are expecting a 24-25% plus kind of an AUM growth and profits of close to 6 billion for Chola. Commentary on margins and on the impact of RBI transition, they have clarified amply. However, just need to kind of ensure that it is on those same expected lines is what one would look for.
Okay, all right. Hi, Samir. Good morning. What about the gold financiers? Muthoot and Manappuram, they used to do quite well. But now these banking names, they gradually, become quite aggressive in that space. What's your sense on both these two?
So we don't have a formal coverage on Muthoot and Manappuram. But as you rightly said, banks have gotten aggressive over the last 24 months in this segment. With respect to banks, they will continue to chase this asset given the secured nature. And now it is coming at a huge distribution presence, which was a mode for some of these non-bank guys. We will probably have a period of transition, which I think is still underway. While in the near term, the strong gold prices should see a bit of a AUM tailwind for gold lending. Though specifically, I'll refrain from commenting on these two from a quarter perspective.
Samir, beyond this earnings, what are your sort of top picks in the NBFC space?
Yeah, hi. So we continue to like Bajaj. We think it continues to be a secular story despite increasing competition. We also have a positive view on Mahindra Finance. We think they are moving in the right direction, though there have been initial hiccups, but I think they are well placed. Historically, these companies used to earn well above a 2% return on asset. I think a lot of the issues of past cycle are behind them. So we like Bajaj, we like Mahindra Finance, we like also Poonawalla Fincorp, which is a relatively smaller in terms of AUM, but I think the growth tailwinds are quite high from a 3-year perspective.
Any stocks that you would avoid now from the entire basket that you track?
I lost you there, sorry.
Any stocks that are avoidable from the entire basket that you track?
So I think the whole narrative on NBFCs has to be looked in this context. Fundamentally, the bottom-up numbers are continuing to improve over the last 4 quarters. However, the interest rate narrative, which is currently going on with respect to rates remaining higher for longer, and I think that is more global in nature, at some point in time over the next 6 to 12 months, this will turn. And that is when meaningful outperformance from NBFCs will come through. Banks have kind of outperformed quite a bit. Incremental juice will probably is not so much as was the case 6 months back. So one needs to watch out on the interest rates commentary. From a clear avoid perspective, given that what stocks have done, I will not put any of my coverage names in that list. Though we think that some of these smaller housing finance names at some point in time will have competition from banks, though we don't have a formal coverage yet. In my coverage, I think one needs to watch how the interest rate narrative changes, but fundamentally most companies are doing well.
All right, Samir, thanks very much. Good to have you with us here. So 3 names, Poonawalla FinCorp, Bajaj Finance and M&M Financial Services. Those are sort of Samir's picks at JM Financial Institutional Equities and decent quarter for the space. We'll take a quick commercial break with news that the Nifty is up, 25, 26 odd points. It's, I think, pretty much the same kind of screen. Maybe PSU Banks is one area which is a new addition to what we are seeing. If you can have these names, IOB, Indian Overseas Bank, that is. The PSU Bank index is up, moved up to being at the high point of the day. It's up 1.8. IOB is up 5%. Maharashtra Bank, Bank of Maharashtra is up 4%. UCO Bank is up 7%. Union Bank is up 4%, and so on and so forth. So that entire pack of the PSU space is doing very well. And most of these stocks now at the last hour high, which is also the day high. We take a break. We are back with Mitesh, who is back with us for some technical trading ideas. Should you buy this dip which has emerged in the last hour? Mitesh will tell us more on the other side. Okay, welcome back. What the market doing? I mean, it's off the highs, but 23 points still on it. Mitesh is back with us to tell us what he makes of this dip that we are seeing. Would he buy it? Mitesh, morning again. What would you do?
In fact, I would be inclined to buy into the index. I think I was looking at a move beyond Friday's high to take a buy. And with this dip, I think, we have added a bit more on the index. I think today's low, in fact, just below that. Friday, the last hour, we got a low of around 17,934. So that's on the spot. That becomes your stop loss. And I think on the upside, 18,150 is the first target, which I would look for. And if that is crossed, then 18,250 as well. So I think slightly trading with positive bias. I have Tata Motors on the buy list. Keep a stop below 405 here, 404 here, and look for targets of 425. And you were highlighting the banking name. Union Bank is something which has given a very good breakout on the intraday charts. That's a buy. Keep a stop below levels of 79.5 and look for targets around 86.
Okay, thanks a lot for joining in. Let's shift focus now to the commodity markets. Manisha Gupta is with us. Manisha, I know we talk a lot about crude, but also gold. I mean, that's been hitting new highs, lifetime highs last week. So what's the one commodity that you are tracking this morning?
Absolutely not taking my eyes away from gold, because an all-time high is exactly what we are trading with right now as well. Pardon me. In the international markets, we are holding around that $1930 per ounce mark. But for the Indian markets, we've crossed above 56,500, which is an all-time high for gold. The last time we saw an all-time high was in 2020 at 56,200. So comfortably above those kind of levels right now. For the international markets as well, we are trading at a 9-month highs on your screens here. If you look at the US prices until now for gold, we have gained 5% for 2023. So that means for the month of January, we are up by nearly 5%. Last month was up by 4%. In the month of November, we saw gold prices gain up by 7%. So third straight month of very strong gains continuing in case of gold prices is how we are trading. For the Indian markets as well, the gains have been quite strong. Last year, because of the rupee depreciation, we saw the gold prices gain up by 12%. In this year as well, until now, with the all-time highs, we are up by nearly 4% in case of the gold prices in the Indian markets there. This is the trajectory on how gold prices really have been behaving. In 2015, we touched a low of nearly $1,000 per ounce for gold. 5 years later, we were at an all-time high at $2,070. So the gold prices clearly doubled in a matter of 5 years. Last year in September, we hit a 30-month lows at $1,600 per ounce, and we are trading at $1,930 right now. So that has been a $300 per ounce of a jump up in 3 months when you look at the gold prices. So very strong returns is what we've seen into these markets. There has been a lot of short covering, fresh buying as well, and there are various factors which actually are working in favor of gold right now. To begin with, it has been about dollar index trading at a 7-month lows. In all currencies, the gold prices are hitting all-time highs or multi-year highs. Markets also are looking at the softening U.S. inflation still at elevated levels, and that continues to be supportive for the gold prices. Lower rate hike expectations from U.S. Fed have been factored in. There's a 97% probability of a 25 basis rate hike there. And then the Indian wedding season begins from this weekend, and This season actually accounts for 50% of country's demand. It is anticipated or estimated that 20% of every wedding is a jewelry buying expenditure there, and that is where gold price is taking support from. This is the outlook for 2023, and since we're trading at 1930, I'm only going to talk about levels higher from here. So IFL, UBS talking about 1950 to 1900. 2000 is what Nirmal Bang and Saxo Bank talked about. 2075 is an all-time high, so the prices can go beyond that as well. Stancy, Swiss Asia, Credit Suisse, AUAG Gold Mining ETF are talking about all-time highs in the year. Highest 2,500 coming in from Swiss Asia. But the markets do believe that if we are able to cross above 2070, which has been an all-time high, then we are looking at a breakout and higher highs for gold.
Okay, all right. Thanks a lot for that, Manisha. Well, time to highlight all the top movers in the first 45 minutes of trade. Mangalam joins us to tell us about Sula Vineyards. Well, that stock is flying away, Mangalam.
Yes, you're talking about wine on Monday mornings, Nigel, because in the third quarter, a lot of people consumed a lot of Sula wine. That's what the company's third quarter update says, because they've reported their highest ever quarterly sales. And remember, this is the first quarterly update that the company has given post-listing. The stock up 9%, sales growth of 13% year-on-year in the third quarter. And the third quarter typically is a strong quarter for wine consumption. So on a high base, they've seen a 13% growth. In fact, for the year itself, there's been a near 28% growth. The growth has been broad-based across their own brands, which accounts for majority of the company's revenue. The sales are up 13%, 187 odd crores out there. And wine tourism, which is the wine park, etc., has seen a 13% growth out there as well. 23 crore is the company's revenue there. The key trigger now for them to watch is that their 2.5 million litre cellar has been on stream, and this is in time for their 2023 grape harvest season, which the company believes has strong visibility in terms of both quality and quantity. So additional capacity right in time should aid their volumes further.
All right, Mangalam, thanks very much for that. So that's Sula for you. Look at PVR. I mean, if we can quickly put that up, it's a sharp reversal. Stock actually opened higher. The high was 1762, and now at about 1717. So from the gap up that's been aggressively sold into, this is one of the stocks that we had highlighted a couple of days back on Market Laser as well. That's it's the same problem for a lot of these stocks, which have all now a lot of them have fallen below this sort of trend line from the lows of June. For the first time, this is happening for many of them, and that kind of then acts as a bit of a resistance. I think there is a downgrade as well from Kotak this morning, which has come through. Although, I mean, I looked at it, they're kind of saying, well, audiences will not tolerate mediocre films, and that's a structural kind of negative because of the rise of OTT, etc. Their price target, though, is still about 1850, even after the downgrade. So, I mean, the earlier one, I guess, it was even higher. 1716, though, on the name. Sonia.
It's also a very interesting report. They're saying that, the box office collections have fallen a lot. The total number of Hindi films crossing 100 to 200 crore box office collections has fallen to just 7 in calendar year 2022 from 17 in 2019. So, that's the premise that, OTT has really changed the consumer behavior and hence that downgrade. But let's move on and track Just Dial. That's been a big mover this morning. Rima is here to tell us why. Rima, over to you.
Thanks so much for that. So it's a strong showing from Just Dial in the quarter gone by. Revenue growth at 7.8% on a quarter-on-quarter basis. On a year-on-year basis, it's touching that 40% mark. And if you look at the quarter-on-quarter trajectory, you would see for the last 3 quarters, things have been pretty good for Just Dial. They have been reporting a sequential improvement. On a year-on-year basis as well, 40%, 39.3 to be precise, is the best that we've seen in the last many quarters. Margins have improved for the 4th consecutive quarter. Q3 margins at 12.2%. But if I compare it to the prior quarter, it was 8.3%. And same time last year, margins were at 3.3%. And this improvement in margins is driving a 44% increase in the company's profitability. Paid campaigns, that's a key metric that we track, and that's seen an increase of 19.3% on a year-on-year basis. Again, the best that we've seen in the last couple of months. Citi has written a note. They're saying that Q3 top line was in line, but margins were ahead of their estimates. They've put the target price as 735. Valuations at 8 times March 20 PE. March estimates. X of the cash is just at 8 times, and therefore they're finding the valuations inexpensive, which drives their buy rating on the stock. Back to you.
Okay, thanks a lot for that. Let's slip into a quick break. On the other side, our special segment, it's the economy. Lata will get chatting with Ramani Dati of Team Lease Services and Pawan Goel of InfoEdge to decode the hiring trends that we expect to see this year. Stay tuned.
PS3.